From the trading desk of dailyforex.com, this is Christopher Lewis looking at the upcoming January 31st Forex session. In front of you is the Euro US dollar. And as you can see, we had a positive session for Wednesday as we slice through the 135. Now, the 135 is an area that I've been watching with great interest. And most of you out there who have watched these videos know exactly why. But as a recap, let's take a look at the weekly chart. And you can see that this seems to be, at least from what we can tell at the moment, that this seems to have been a head and shoulders. It's an inverted head and shoulders. It means the same thing. And Technical Analysis 101 states that you measure from the neckline, and that would be your neckline at 135, to the top of the pattern. And in this case, we have 15 handles, 1500 pips. And at the point of the breakout, you add that to the breakout. In this case, it's not, in full disclosure, it's not quite 15 handles. It's a little closer to like 14.7 or so. It was about 30 pips shy, which puts us right here at this high. So technically, everything adds up. We have the nice close on the daily above it. We've most certainly cleared to 135. This does not mean that it'll be a shot straight up. And the real question then becomes whether or not you're the type of trader who can hang on to this trade, or do you go in and out constantly, or do you really try to get cute and short it every time it looks a little overbought? Personal experience for me, at least, is that it's easier just to hang on to a trade. Trust me, things get much more comfortable in the forex markets when you're up in a trade, say 700 pips. At that point in time, you suddenly can put a lot of things in perspective as far as what you might want to do in other pairs, other trades, etc. Zooming back out on the daily, though, you can see this has been a pretty nice round trip for the euro. And that being said, it does look like we're going to go higher. The candle yesterday during the Tuesday session, when I was recording it, suggested that we were going higher, and when we, of course, did break through and close fairly significantly high. We're about 30 minutes from the daily close right now. Looks like we will close towards the very top quarter of the bar or candle, which is always a bullish sign as well. My suspicion is that if we fall back towards 135, this was such a significant level previously that there will be buying interest, and as such, I really think that we have the opportunity to see a nice trend reminiscent of several years ago, 5, 6 years ago, when this pair did this. Whether or not it's going to take off like that is a completely different question, but we have to keep in mind, and I'll point this out again, a return to 150 really, when you look at the longer term charts, doesn't look that crazy. It's just a simple continuation of the consolidation, and especially if it ends up being just short, that would be like the second time it's hit this zone and then possibly fell back. So for my money, and I am putting my money on the line in this, I think this pair is a buy, and I think we will have several buying opportunities. And it will take some time for this move to happen. This could happen at the end of this year, or it could be 2 years. But it definitely looks like something's changing fundamentally in this pair.